Good afternoon, everyone. Today is the 5th day of July, 2013. It's Friday. Is it? It's our first Friday of July. It's the end of the first week of the second half of the year. I should bring up the spreadsheet. We can go over the spreadsheet. Let's do that. Here it is. All right. Our results for today. We had plus 17 ticks in the Russell, plus 8 ticks in crude oil, plus 7 ticks in gold, and plus 4 ticks in copper. I don't know what that puts us up on the day exactly, but it's pretty good. 17 plus 15 is 320 plus 50. That's $380 a contract. We did it all in 10 trades, and we made our 2 points and our 2 points equivalent, which is $100 per contract, in 22 minutes on 4 trades this morning. At that point, we're up at $110 a contract. So far for the month of July, we are up $952.50 in the 4 trading days in July so far. So we're averaging just about $225 a day, roughly. We have, if you apply an $8 per turn commission to every trade that we've taken so far, you would still be up a net of $568.50, which is still pretty good if you consider that we've only been going 4 trading days for the month of July. Last month we were up $5,220. The month before that, we were up $6,292. You know, if you take the first 6 months of the year, we were up just over $30,000 per contract in the live trading room alone in the first 6 months of 2013. And that's one contract. Suppose you had two, then you would be up 60,000, or 3 would be 90,000, or 4 would be 120,000. My golly, that would make you right up there where Obama happens to think most of the United States is. Or, wait a minute, who was that? Romney? I don't know. Anyway. The point of the matter is, for this first 6 months, we were up 30 grand in the live trading room alone, okay, on a single contract. You can make that whatever you want. And actually, you should do better than I do, because I'm trading 8 different markets and answering questions from hundreds of people. And most of the partners do better than I do. And that's fact. You should be making multiples of what I'm making, because you don't miss all the trades that I miss. Now, that said, let's go over the trades that I missed today. We'll go over the trades that I took and the trades that I missed. If you have not taken a free trial with us and you want to take a free trial with us, go to www.cfrn.net/apply and sign up for the free trial. In the free trial, you get 5 days in our live trading room. You get access to all of our indicators, all of our knowledge, all of our indicators, our charting platform. To Dwayne and myself, you get to see the weekly trading zones. You get access to everything but the members area in the weekly partners meetings. Okay? And after that 5 days, we'll make you an offer, see if you like it, and if you do, well, you can become a partner and get into our live trading room every single day. Now, it's probably important to note here that when you become a partner, you're not just getting a set of indicators in a single setup. That's pretty much what I work with in the live trading room every day. You do get a set of indicators. You get a lifetime license to the indicators. And you do get a setup. You get a single one, but you get a whole bunch more than that. But you also get a whole community full of people that are all trying to do the same thing. Some of them are doing it very well, but they're all striving to make money trading commodities, trading futures, trading whatever markets they prefer to trade. Not everybody's going to trade crude oil. Not everybody's going to trade the ES. Not everybody's going to trade gold. Not everybody's going to trade the Russell. Some people will trade, copper, orange juice, lumber, feeder cattle. Whatever people choose to trade. We're all trying to do the same thing. It's important that you keep that in mind. And, while we're all trying to do the same thing, we're all doing the same thing. we're using this 4-tick range charts on every single market. We're using the same trade setup, the same set of indicators, the same thing over and over and over and over and over again. All right, enough on that. Let's go into the trades that I actually did take here today on crude. I didn't trade a ton on crude today. Just a couple of trades, if I remember right. Let's see. That was not today. No, that was July 2nd. Here's today. A few trades. That was not today. Here we go. All right, so our first trade on crude was right here. We made 2 ticks on that. We shorted on the down close off the BBC, and we took profit right down here. Made a couple ticks profit on that. The next trade on crude was over here. We shorted over here, and is this crude? This isn't crude. This is soybeans. Why am I looking at soybeans and talking about crude? That's not even the right market. Today we took 1 trade on soybeans. It was right here. We took a break even on it. Where's my crude chart? I thought I slid the crude over here. Here we go. All right, now the crude. Our first trade was right here on crude. We took a couple ticks profit on that. Right in here. All right, the down close right here. We took a couple ticks profit on that one. We missed this trade, this trade, this trade, a whole bunch of trades in there, and we ended up taking one more trade somewhere. I don't seem to have it highlighted, but I believe it was one of the trades where I just showed my DOM throughout the trade for everybody in the live trading room. Anyway. Anyway, we took 6 more ticks profit on some trade somewhere in here. I don't know where it was. It could have been right in here because I drew the trend line. I didn't put an ellipse on it. So it was 6 more ticks somewhere on one of these trades that we took. However I did it in the live trading room, and everybody saw me do it. But I'm just looking. I don't see. I only marked up the 1 trade there, and we took 2 on crude today. Anyway, there was another trade in here, but what we look for is a close above the trend line or below the trend line, depending on what direction we're going in. In this case over here on a long side, we would be looking for a close above the trend line with a bullish divergence down here on the slingshot. It worked again. It works a lot. It works a lot. Over here we would have been looking for a down close with bearish divergence on the slingshot, and look, it worked again. And over here this one didn't work. This one worked, this one worked, this one worked, that one worked. But that's it. That's all we did on crude today, guys. I don't want to rush through this because I know that we are not going to have David on. So I want to take my time and answer any questions anybody has. Does anybody have any questions about this? I mean, I know normally I get right through it because we normally have a bunch of guests lined up and stuff like that. But today we do not. Okay. Well, today, this is the Russell, okay? And on the Russell, we took a few trades in here. The very first trade of the morning was right here, and we had missed that. Now, Matt, is Matt in here? Let me just check over here and see. Matt, you had asked this morning about some stuff from yesterday. Wrong Matt's in here. There's a Matt in here, but not the right Matt. Anyway, there were trades in here that we missed to start out the day right here on the Russell. A down close below the trend line with bearish divergence. That moved down about 6 or 8 ticks. Yeah, that's it. That green line, third rail divergence. There's sweet stuff in there. Nice opportunities. And again, and again, and again. There's another one right here. This one we did actually take this morning, and on our first tick, on our first trade, we took 6 ticks profit on the Russell right here on this one. Then we had to wait a little bit. It changed directions in here. There was actually a long trade in here that I didn't see. I didn't see happen. But there's a lot of trades that I don't see happening because I'm doing too many things. The next trade was it wasn't this down close here. I had drawn the trend line, but we didn't have any divergence left on that one. It pulled it back again, and it gave us something with a little bit of divergence in here. On that one, I think I got 1 tick profit. I moved my stop to plus a tick. I missed this one over here. I grabbed a little bit on this one. It looks like I grabbed 2 ticks on this one. Okay, I grabbed a couple of ticks on that one. And then I got a little bit more on this one over here on the up close. I can't see what my numbers actually say, but I did get something else right there. I think I got 8 ticks on that, didn't I? Yeah. Yeah, and that put me at plus 17. Plus 17 ticks on the day right there on the Russell. Now this one ended up moving up pretty well. The thing that I was concerned about when it was happening was we were pulling back on an uptrend. And I had thought I had drawn the bottoming thing in right here and said if we don't put in a lower swing right here, by the time the green line gets into the cycle, then we're going to change directions. And, well, that is bottoming. Obviously, I can go back and look at this. But it did change directions. We got long. We took a little piece out of that. And I believe that was it for our trading on the Russell. That was it for our trading on the Russell. We didn't take any more trades. We highlighted an area in here, but the black line got up above the BBC, so there was no trading in there. Okay, that was pretty much it on our morning for the Russell. Okay, we ended the Russell plus 17 ticks. Michael, is it possible to set an alert when a certain candlestick is painted on the chart? Do you mean a certain candlestick pattern, like a Japanese candlestick pattern? It is. I think it's possible to do that. And if you mean just at a certain level, you can also set an alert at levels, price levels. Okay. Yeah, right now on the Russell, there's a long trade right here at 14.2. Okay, right. If you want to do candlestick patterns, you go into indicators. I think it's in here, TA Live, Japanese candlesticks. You can do it in here, turn on whatever it is you want. I don't know if they have an actual alert. Common settings. It'll show it on the actual candlestick. Is what, you know, like if I wanted to see the dark cloud. No, we can't do dark cloud cover. If I wanted to see a dragonfly doji. Let's say we turn that thing on, and we'll make it red, but we've got to make it really big so it jumps right out at us. Now all the dragonfly dojis should have something red on them. And where's your dragonfly doji? There's got to be one in here somewhere. Not sure. I'd choose that on a day where we don't have dragonfly dojis. I will find one. Usually we have some. I know there's a bunch of red candles, but those are not dragonfly dojis. I had to do it on the ES, didn't I? You know, on Crude or Gold, we'd have these things all over the place. Anyway, that's what you have to do. Okay. Let's see. Speaking of gold. I didn't do gold yet, did I? I don't think I did. Speaking of gold. We had some opportunity on gold today. We ended plus 7 on gold. We missed a ton of trades. As we always do. But we were able to take some profit out of the market. As we usually do. Let's see. Right at 9:30 here at the open. The MA1 and BBC were a little mixed up right here. But this down close right here was a shorting opportunity. Depending on where you filled, you probably would have been okay with that. Your stop should have been up here. Okay, so you would have been okay with that. There was another one right in here, pull back up. This would have been the down close below the trend line. All right, another one right here. I'm just looking down at the bottom at the divergence between the green line and the cycle. As long as you still have divergence, you can still take these pullbacks. You know, if there's room for it to run, you can still take it. So it was good all the way until right here. Okay. No more trades right there on the short side. Then it tried to put something together here on the long side. If you jumped in long right here, you would have stopped out. You would have been able to go short in several places. 1, 2, 3, 4, 5 spots to go short, and 1 to go long, and the one that went long would have stopped you out. Turns around and it gives you the opportunity again here on the short side. You would have gotten your money right back. Another one right in here. And gold just provided a ton of opportunity. We didn't take our first trade until over here. On our first trade in gold, we only looks like we took 1 tick profit on our first trade in gold. Our next trade, we added on to that a little bit. I think we took a few ticks on the second trade. And a break even here. And it was just a long trade. A minute ago I told you about the long trade here at 14.2. Right? I said right here, there's a long trade on gold at 14.2. But there were a bunch of trades that we missed in here. Okay, a bunch of trades. Can I show you the GGC at the news at 8:30 non-farm? Well, it wasn't just non-farm. It was non-farm and the unemployment rate. But sure, I can show it to you. Here it is. Well, 8:29 had all this, and then finally it came out here at 8:30. And you can see all these bars from here to here happened in 1 minute. So is that tradable in there? Probably not. The DOM would be jumping up and down so fast. You just have to enter a market when you think it's right, and hope you got it near the spot you wanted to enter at. But not a good way to trade. But there was a bunch of activity, a bunch of movement this morning. All right, and that's good, being that it's the day after a holiday and a midweek holiday and all that kind of thing, sort of stuff. It's good that it happened that way. All right, so that was gold. We ended up plus 7 ticks on gold. All right, I remember drawing this in here and saying if it doesn't break down through there, we're going to have bottoming action. It did eventually get down through there. It's actually a head and shoulders pattern. You see the heads right here. Shoulder. Head. And a shoulder. And this was the level it needed to break down below. It happened to coincide with my box. Once it broke down below there, it was a pretty quick movement down, and that's usually what happens when you have a head and shoulders break, neckline break like that. It's usually a pretty quick movement down after that. But yeah, he's holding the cane with his hand. That's why his shoulder's lower. He's leaning on it. Anyway, that is gold. All right. Now the soybeans, we touched soybeans for just a few minutes here earlier when I thought it was crude oil. But it's actually soybeans. We had one trading opportunity on soybeans right over here. We got short and we ended up taking a break even on the trade. We waited around in that trade for a few minutes. I mean, this whole thing happened, but this happened at 11, and this, it got down here an hour and 15 minutes later, and that's just way too long for me. It did have another opportunity in here, a shorter one right in here, and another one right in here. Okay, for a couple more spots there. Okay, in there. Well, you would have had to have drawn that trend line again. Take that wick into account. So it would have been like that for that move. And then you didn't put in a lower swing, but if you ignore that, then you would have been looking at the down close right there. Down close below the trend line. That's what you would have been looking at. All right. And that was it on soybeans. We made no money on soybeans today. We didn't make any money on the NQ either, but there's a ton of NQ trades. For those of you guys who like to trade this NQ, there's as many trades on the NQ as there is on gold. Probably even more. To look for the trades without looking at price, just look down here at the divergence on the slingshot and say, okay, there's divergence right here. Price is probably pulling back, and there's probably some sort of an opportunity to trade, right? So what you do is draw your trend line, find your close down below the trend line, and that's your spot to enter, which would be right there. Look again. More divergence down here. Price is probably pulling back. It was. Look for your down close below the trend line. It's right there for the move down. There's divergence on the bottom. Look up here at the top. Where would you draw your trend line? Well, in this case right here, you would draw up these, and then you get the wick, and then you get the down close. So you wouldn't have any opportunity in this one right here. You look down again, you have divergence again. Where's your trend line? Up here, like that. Your down close below the trend line is right there. You get a bullish cross, and it's all nothing in here. Nothing to trade in there, nothing to trade in there, nothing to trade in there. Then it starts to run. You look down here at your divergence. You look up here. Where would you draw your trend line? Right down the top, like this. Okay? Right down the top. So you look for your up close above. There it is. Get divergence again. Where would you draw your trend line? Well, okay, we missed one little spot. And we missed this, but there was sort of a continuation of this one. Over here, you get your nice divergence again. Where would you draw your trend line? Why, you would draw it down the top, like this. Okay, your up close above the trend line's right there for the move up. You get your divergence again. Look up here. Where would you draw your trend line? Well, you would draw it just like this. All right. Now here you get an up close with a black bar, red cycle heading down. You'd still take it. You'd lose 8 ticks on that. Okay? But you made, whatever here, and on the way down, 5 times right there. You're bound to have a losing trade eventually. Okay? So it changes directions. That loss right there said, okay, so it's changing directions. So you have your bearish cross, you pull back up, test to the BBC, you have your divergence down here. You're going to draw your trend line. Just like that. Well, actually, on the down close, if the cycle was red, you don't need a trend line. But in this case, you draw your trend line just like that. Your down close is right in here, so you get short, you get short. There's no divergence on this one. There is some divergence on this one, but the cycle's headed up. So that may be the bottom right there. It goes down a little more. You don't have any opportunity right in here either way. It goes down some more. You look for your divergence. Where can you draw a trend line? Actually, nowhere on this first run, but on the second one, right here. It drops some more. And that's all in the first 45 minutes. The NQ, if we were to trade the NQ every day, we wouldn't be able to trade anything else because we'd be so busy trading the NQ. And that's a lot why we don't trade it as much as we trade other things. It's $5 a tick. $5 a tick, and we'd be trading it all day. But there you have it. That's the NQ. And, there are a ton of trades on the NQ today. Every day, especially if there's volatility. And there was certainly some volatility today. Let's see, the ES. We pointed out a couple things on the ES, though we didn't take anything on the ES. There was a shorting opportunity in here on the ES. It dropped down a couple of points. A shorting opportunity here that ended up going down to this level right here, and we hit that level a bunch of times. And you should have had a break even on that several times. Changed directions. What was setting up was a long over here, and people were asking me about it, and I said, you know what, I don't think I'd take that long because I think it's going back down to the zone. And it did, and it bounced off the zone, and then it went through the zone, and then it came back to test the zone. And people were asking over here, would you take this long? And I said no, because it's going into the weekly trading zone. It went up to the zone, it got rejected by the zone, and then it went through the zone. And that's not unusual behavior. The fact that it got rejected by the zone, that's why I don't take trades going into the weekly trading zone, because they are often rejected by the weekly trading zone. Maybe not permanently. Well, never permanently. The price can always eventually go through it, but for the time frame that I'm looking at, it's enough. Okay. Let's see. Over here, I had copper around here somewhere. Copper. Where's my copper chart?
Hey, I'm here, just so you know, and there's no need to rush, but there is a short trade setting up on the ES. Do you have any interest in placing a live trade? Or just maybe not trading it, but walking the folks through it?
Okay, I can walk everyone through it. I don't have an ES DOM up. Hey, there's my Dragonfly doji. It almost made one there a second ago. But I can walk everyone through it. Okay. Here's what we look for. Let me bring up the picture.
Just double checking to make sure we have everything.
Yep, we do. Here we go. We'll look at the short side of this, okay? Step 1 is the MA1 crosses below the BBC. It did that right here. Step 2 is price pulls away from the BBC. Right in here, it pulled away from it. Step 3 is price pulls back up to test the BBC, and it's now done that. And you have to have a down close. That's part of step 3. It's a down close. And step 4 is divergence. We need bearish divergence with a red cycle. All right, we got an up close on that bar, but it's still okay. It's still okay. If we get a down close on this bar, it's still good because the cycle is still red, and this black step line is still below the BBC. So a down close on this bar would still be all right. If the high of this bar is 16.19, then we know the low of that bar is going to be 16.18. Okay? If the high stays there at 16.19, we know the low is going to be 16.18. So if you get the down close, that's going to be your entry right there at 16.18. Okay? If you get the down close, that's what we'll be looking for. All right?
Now, some would, of course, ask, is it possible to enter that trade on a stop? What are your thoughts on that?
On the ES, you can.
Mm-hmm.
On the ES, on soybeans, on copper, on slower moving markets like this, you can certainly do that. You could put a sell stop on at 16.1775. You can't put a sell stop on at 16.18 because that can get triggered in, and you still may not get the down close. You got to put it one tick beyond the down close. If we know the down close is going to be at 16.18, then you can put a sell stop on one tick below that, and that will get filled if you get a down close at 16.18. It'll be off by one tick from the exact entry at 16.18, but at least you don't have to babysit it as much. You don't have to keep your finger on the trigger. I do that with soybeans, and I do that with copper. I'll put that sell stop on. A lot of times with the beans, and there's a good example happened today with the beans when you get your setup, if you don't get filled right away, then you could miss the whole move. This whole thing could go down like this in a couple of minutes and never pull back. That's why it's good on the soybeans. The ES, you can see right now, it's not that there's no liquidity in it. There's a ton of liquidity in it. It's just that it's not moving very much. It's the Friday after a midweek holiday, and I think we're losing momentum.
Yeah, in fact, in regards to liquidity, we have 10,121 contracts on the bid, 9,200 on the ask, and I'm only looking at, I think, 10 levels deep.
Yeah, and there's usually twice as many, 10 levels deep.
Yeah. In fact, let me look and see what our daily volume is today. That is 1,112,000 contracts. So we did break a million. That's pretty good for the day after the holiday. Yeah.
Now, this trade is about to be disqualified right here because the black step line is crossing over the BBC. It's crossing up above the BBC. If that crosses up, then we're no longer looking for short trades.
And I'm going to go to my DOM when that happens, and I'm going to click Cancel All. Yep. You always have to remember, once you initiate a trade like that, you want to enter it on a stop, and then another market starts to go off, and you get, to looking at that, you forget that you had an order on with the ES. That thing could come back, a couple hours from now. The market starts trading the other way, whatever happens, you get triggered into an order that you no longer, there's no setup or criteria for you to get into that trade 2 hours from now. Really important to go back and hit Cancel All, okay?
Okay.
And most of us have to learn that the hard way a couple of times.
Yeah.
And then it becomes a part of our, ritual that we just do it without even really thinking. We just cancel all.
All right. You see right there, the black line just got up above. And what Dwayne's talking about is the hard way is you actually forget your orders on there and you get filled and you lose money. And I still do that.
You hear your headphones, it goes clunk, or if you got your speakers on, it goes clunk.
Yep. and you know you did something wrong. You're like, oh.
Now, guys, as Michael is finishing up his recap today, if you have any questions about anything, there's a lot of you here, but we do want to answer questions, so type them in. Okay, type them in. I got a text message from David. He had planned to be with us this morning, but he's hung up with somebody in a meeting. Let me read it.
The battery died in his car on the way to work.
I have someone in town, and I don't think I'll be available for the radio today. I'm very sorry. Have a great weekend. Tell everybody I said hello. Have a great weekend, and I will see you all on Monday. So with that said, Michael, if you want to take your time, I know you've got things you have to do as well. So
Yeah, I do have children to feed and stuff like that. But I'll get to that. I'll get to that.
Okay.
We have to
All
feed
right.
these hungry minds.
Mm-hmm.
Well, I
If you
can
got
stop the
questions,
recording
guys, type
here.
them in.
I can stop the recording for the recap. I'll stop that now.
Okay.
Again, if you have not taken a free trial with us, go to cfrn.net/apply. Sign up for the free trial there. If you have taken the free trial and you want to become a partner, then send us a quick email at support@cfrn.net, or you can just call 949-42-EMINI or 949-423-6464. Okay, and we'll get you set up. All right, I'm gonna stop the